Stock market. When you hear the word stock market, what comes to your mind? Money movement, profit, loss, different companies, exchanges. To a certain level, these are right, but stock market has more depth to it. Hi, this is Aditya from Mostly Bearish. Welcome to the first video on stock market education. I'm going to be talking about the technical aspects of the stock market. Today's video is about stock market itself. We are going to be laying a foundation over which we can consistently keep building. Today we are going to be talking about why stock market exists, the different aspects of stock market, broker, Demat and trading account, what are indices, and the different sectors. So make sure you watch the video till the end to understand what stock market is. Before entering the topic of stock market itself, we need to understand why it exists. How individuals are always in competition to outgrow themselves or their competitors. Companies also are in competition to outgrow their rivals and do better and exponentially grow. Same way, countries also are in competition. They want to consistently keep growing. You would have heard countries are underdeveloped, developing, and developed. So every country tries to become better than what they are right now. How is this going to happen? A country is going to be developed if the companies within the country are doing well altogether. So when the companies start generating profits, that's when that contributes to the growth of a country. When the companies export, that's when money comes into the country. Economy, as you have heard, is a system of trading things of value. Economy in general shows how the companies within the country are performing. Gross domestic product, GDP, is like a pointer or a scale which shows the incline or decline in a country's economy. I hope these three things are clear because these are the reason why stock market came into existence. There are different types of companies: small scale, medium scale, large scale, and industries. Every company requires capital for operations or expansion. How do these companies get the capital? So the companies generate capital by two ways. One is debt financing and the other is equity financing. So debt financing is nothing but taking a loan from a bank, which needs to be paid after a certain interval of time. Whereas equity financing is raising capital through angel investors, venture capitalists, or the stock market. Stock market is such a platform which enables us to buy these companies and become an investor in them. Now let's talk about how these companies enter the stock market. They do it via initial public offering, IPO. So IPOs come out for a subscription for somewhere around 3 to 4 days, where people subscribe to the IPO and make a debut in the stock market within 2 to 3 weeks. Let's take an example here. I'm going to be talking about IRCTC. IRCTC came with an IPO. The price band was somewhere between 315 to 320 rupees per share. The IPO was available to subscribe to between September 30th to October 4th, 2019. On 14th of October was when IRCTC entered the stock market. The price was 644 rupees. Now, when it is a part of the stock market, people can choose to sell or buy. People who believe that the prices are undervalued and the company can do better, they buy. Whereas people who feel that right now there might be some change in news or the prices are overvalued, they can sell. The buying and selling happens by an automatic order matching system. So now we spoke about buying and selling. How can we buy and sell? Broker plays a mediator role in this buying and selling. The broker opens a Demat account and a trading account for us. Demat account is like a savings account. How we keep money safely in a savings account, the shares that we buy are safely kept in a Demat account. Trading account gives us access to buy and sell these shares. Security and Exchange Board of India, SEBI. This is a government organization mainly set to protect investor from any kind of unregulated movements in the market. So it's like a regulatory body which takes care of the operations of the stock market and it makes sure things do not go wrong. Now let's talk about the different exchanges. India has two exchanges, National Stock Exchange, NSE, and Bombay Stock Exchange, BSE. National Stock Exchange has more than 1,900 companies listed on them, whereas Bombay Stock Exchange has more than 5,400 companies listed on them. It is not possible for retail investors to keep following all these companies on day-to-day basis. That is the main reason index was introduced. There are two main indexes. Nifty, National Index 50, which is the index of National Stock Exchange. Sensex, which is the sensitivity index. This is the index of Bombay Stock Exchange. Nifty has 50 top performing companies from different sectors listed on them, whereas Sensex has 30 companies from different sectors listed on them. The different sectors that I was talking about are pharmaceutical, IT, energy, financial services, and telecommunication. I hope things are clear and you know the basics of stock market. This is a foundation video. From the next video onwards, we're going to be covering different aspects of technical analysis. These are the topics I'm going to be covering as a playlist. Make sure you subscribe to Mostly Bearish and press the bell icon so that you don't miss any of the updates of my upcoming video. Thank you so much for watching.